Morning, everyone. It is the 18th of December, your midday update on the stock market. So, having a look at the ETFs, so SPY, Qs, the SMH, as well as the Russell 2000. What do we look at? What do we see? So we see that we are still below a declining 5-day moving average in all of them. One thing to note is that we have regained the volume weighted average price for the week. This morning we had obviously a positive CPI and claimless jobs news, gave the market a little bit of a boost here this morning, and we are pretty much on or fighting the week volume weighted average price. So we'll see what happens here. I mean, at the end of the day, we still have the anchor from the Fed up just above us, as well as likely an anchor from the all-time high, which I haven't got on the chart. But we also have this 5-day moving average, which is declining on each one. So this is right now technically a rally in a downtrend. And I think that's just something to keep in mind if you're opening up new positions. It looks like it could be a reversal, but we'll only know after the fact. If we look at the pattern of trend here on the shorter term time frame, these are 30-minute bars, is that we've come up against this week to date volume weighted average price several times now. So whether or not this is going to hold or whether we'll see a continuing decline. Qs are a little bit stronger, but again, it looks similar pattern. We break above the volume weighted average price for the week and then it sells off. We are above it more significantly in the semiconductors, which I think is a bit more of a positive result. However, we need to look at Nvidia to see what's going on there. And the Russell 2000 continues just a profit take here on a slow margin. It's below a 5-day moving average and it's not really something to get involved in. So we'll have a little look at each stock a little bit closer. Let's have a look at Nvidia. Let's see what's going on with Nvidia this morning. So let's go down to a 2-minute time frame to see what happened. And ultimately, it gapped into that week-to-date volume weighted average price, which is that blue anchor. It sold off and then it closed the gap on yesterday, and then it's regained the volume weighted average price for the day. It is still below that declining 5-day moving average here, and it will continue to do so unless we get a significant rally over the next 2 days up to that 180 mark, which would be almost 10 points, which is kind of unrealistic. Actually, it's not unrealistic, but based on the fact that we're in a downtrend, if we look on the daily time frame, it clearly looks like we're entering a potential stage 4 decline, right? Stage 2 run up, we're in distribution. It tried to break out, it failed to break out, it pulled right in. And now we've got a lower high on the daily time frame. And honestly, it looks like if we break this 169 level, like I said yesterday, we are highly likely heading down to the 200-day moving average, which is that red line here, and potentially the year-to-date volume weighted average price. We'll see. Suppose Santa Claus rally next week. Starts on the 24th, runs to January 2nd. Last 5 trading days of the year, plus the 2 trading days at the beginning of the new year. So we'll see how she plays out. But we'll have a quick look at Tesla. Daily time frame does remain bullish and intact. Got all above the rising 5-day, all the moving averages. On the daily time frame, it looks like yesterday's shakeout below the low of this little kind of this sell-off here undercut that, and now it's regaining. It's regained the week-to-date volume weighted average price, and it looks like it's holding above the volume weighted average price for the day. So if you're involved in Tesla, I would say definitely know where your stop is. We are quite extended here. If we look at where we've come from, 402 to 481. I mean, we're up 80 points here on quite a volatile stock at times. Outside of that, I don't think there's anything else to really mention on the Mag 7 stocks. We are continuing a decline. PLTR is starting to roll over. It's up against that 5-day moving average. It's going to be choppy in here for the next little bit until it gets a trend on the go. Google's still in an obvious downtrend. Clear pattern of lower highs and lower lows. I don't think there's anything more obvious than that. Have a quick look at a few stocks I was keeping an eye on, and we'll start with AMT. Definitely a slower moving stock. Let me just change this to 2 screens here. So on the left hand side, we've got the daily time frame. We've looked over this last couple of days. We keep it on our watch radar, right? We keep it visible to us. We keep an eye on it. So AMT, you know, it's been fairly choppy in here, but we're now below a declining 200-day moving average. The 50-day moving average is continuing to decline, and certainly will be over the next few days as we kind of hit into this data here. And the 20-day moving average is kind of choppy, but it's also come down and it's coming over the top. We're below the month-to-date volume weighted average price. We're also below the week-to-date volume weighted average price. And if you were looking to get short on this morning, which was something that I advised of yesterday, is we run into the week-to-date volume weighted average price. Let's put the 2-day anchor from yesterday on. Like, that's an important level. So we kind of battled in around there. The daily volume weighted average price was below that 2-day volume weighted average price. And you could have shorted it here this morning, first thing out the gate. Let's go to a 1 minute time frame. Either as it ran up, hit that week to date volume weighted average price, broke through the 2-day, and then broke through the 1-day. Here, with a stop above today's high, would have been a good short potential. Or you could have waited and it came back, touched that daily VWAP, and then made a lower high and then broke here. This would have been also at 178.26 with a stop above, a tighter stop at 179.48. Or if you wanted a bit more room, to kind of put it above that 5-day moving average, you could also put it up here at 181, basically about 181.1. I would put about 3 cents above it, just because it wouldn't want to put it at 180. So that looks to be breaking down. Keep in mind it is a slow moving stock. It's not something that necessarily a lot of people get involved in because it's not very volatile, but it looks like it has potential to break down. Even if it breaks down about $5, you could take some profit off of that. SSNC was one that I had for on the long side. So this one, the daily time frame makes a pattern of higher highs and higher lows. It looked like it was that 5-day moving average was starting to curl over here this morning. We had a shakeout here, kind of tighten consolidation, shakeout below this recent low here. It regained it, held above that 5-day moving average. And if we look on the shorter term time frame, which is a little bit choppy and a little bit broken up, yesterday it kind of gapped down in the morning, invalidated the trade. It wasn't really possible for us to really get involved. And then this morning, you could have bought kind of in around this area if you were fast enough. It moved pretty quickly, but we're up $1, roughly about $1 on SSNC. And I would say you'll stop if you are involved in SSNC. Probably just put it below the low of the day at this stage. If we, it's already hit up into R2. If it fails and breaks down below this level, you probably just want to get out because not really want to get involved in. I'd say keep an eye on Palo Alto, PAN-W. We're below a 5-day moving average on the daily time frame. It's come a little bit too far for me right now. We're below the appropriate moving averages. We're below the volume weighted average prices as required. But on this 30-minute time frame, we've had a decline from almost 199 down to 186. So put it on your watch list. I would say you could easily see it kind of pull up into the 5-day moving average, and maybe we just break this pattern of higher highs and higher lows. But for a short potential swing candidate, I think you likely could see it come down to the 165 level on the longer term time frame. It's starting to move into a downtrend, and it's something that we should keep an eye on. The other thing I was just keeping an eye on this morning, which didn't trigger, was and it is because we still continue to have a rising 5-day moving average, is this JM Smucker company. So if we look on the daily time frame here, we have all the declining moving averages. It looks like it has the potential to break down further. We have a clear pattern here on the daily time frame of lower highs and lower lows. So we could easily start to break down towards maybe that 86 pivot level. That was my thought process. If we go back to the 30-minute time frame here on the left, is we just kind of run into this section of data here down at 99. So that's what's making that 5-day moving average kind of run up. Now, over the next few days, if we can potentially have it so that 5-day move, if we don't have too much of a rally here, let's say it starts to kind of slow down today and start to kind of break down, that 5-day moving average will then start to roll over as we get into this data here, right? It might be a bit choppy, but as long as we're kind of below this level, we would see that 5-day moving average starting to roll over. And at that stage, we would be potentially at the top of the next downtrend, right? If we look at what happened here, downtrend, we've come a little bit too far. Let's give it a few days to potentially consolidate and then start to roll over. Today is obviously not the day. It's had a decent rally. It's up to daily R2. So not something to be involved in. That's the midday update, folks. Hopefully it was helpful and put some ideas on your plate. Outside of that, I'll catch you at the end of the day. Thanks.